Welcome to our very first podcast. Today we have a great guest. He is the co-owner, president, and chairman of eMortgage Capital, Sam Hijazin. eMortgage Capital has helped over 900 different independent local loan officers to establish their businesses and to flourish. As a company, they're doing 1,400 transactions per month, totaling over 500 million in mortgages. It's great to have you here, Sam.
Thanks for having me.
Yeah, absolutely. Well, so maybe as we start off, we can just talk about that. I mean, you started really with an engineering degree and went to Raytheon and did a number of months at least at Raytheon before you realized that that wasn't your dharma, and so you then made the switch to mortgage. Tell us a bit about that transition. How did you come to that decision, and how has maybe engineering served you in
Yeah.
this new role?
What's the adage? A person often meets his destiny on the road he took to avoid it.
That's right.
I mean, I'll be candid with you. I mean, I failed at my first career, which is how I landed in the mortgage business. I say that half jokingly. I don't know a lot of people that set out to be loan officers growing up. Usually it's something that they, fell into after trying their hand at something else. So at least that's how it was for me. So yeah, I worked at a job I didn't like, so I quit. I met an attorney shortly thereafter, and he was starting a little outfit. He convinced me to join, and until I figured out what I wanted to do in life, I was having a midlife crisis, before the age of 23. So he convinced me to join. He taught me the business, and after about 6 months or so, I kind of ran with it. Ran at first. I went to go work for a wholesale lender. I observed everything that I could, and I worked, every type of position you could think of in the business. Climbed up the corporate ladder, and in 2007, when the world around me felt like it was imploding, I took the contrarian approach and became a broker and opened my own little shop and haven't looked back since.
That's awesome. Yeah. When you made that switch, I mean, you were pretty young still, but were there people that were questioning that decision, having gone through all the school to become an engineer, and now you're going to pull the plug and go a different direction?
Yeah, I mean, I'd be lying if I said it didn't come with a little bit of skepticism from my family. I mean, I was the first person in my family to go to college. Only reason why I went into the field that I did was because my dad said he had the foresight and said, computers, that's the way of the future. So that's what you're going to do. So I'm like, okay, well, I'm the first one in the family. Didn't really have anybody to show me or tell me otherwise. So that's kind of what I did. And, I understand for a lot of people, family can have a significant influence on their career choices, but fortunately for me, my family's always been very supportive. But to succeed in life too, sometimes you kind of have to take a step back and do the exact opposite of what everybody around you is doing. So some people call me stubborn. I prefer to think myself as an independent thinker, and so when I set myself to something, I usually do it regardless of what anybody around me has to say. And so maybe that's why I didn't encounter a lot of resistance because they knew it was a lost cause.
How, how big was that first market you served when you entered into being a broker?
When I first left the wholesale uh, industry and I went to become a broker, it was a small outfit based in the South Bay. And I think at the height of it, I had maybe 25 loan officers, give or take.
All right.
That was my first foray at being a business owner and learning how to manage people. The loan business is easy. Dealing with the people, that's the tough part.
It always is.
Yes. Everything's a people business at the end
Yeah,
of the day. Yeah.
yeah,
And that's always where all the challenges lie, for sure.
yeah.
That's great. And then if I got the story straight, eMortgage Capital was born during the pandemic. Um, and so you and a childhood friend who you also
Yeah.
had professional respect for then joined together and created eMortgage Capital?
Yeah, so my business partner and I go back to childhood. Him and I have been friends since we were 14. So we're celebrating our 30th year of friendship. I'm not sure if I'm going to renew next year, but yeah, so if we did it. No, my partner and I, we go way back. He's like a brother. We're like family. But we both had our own kind of unique journeys into getting into the mortgage space. Me, I was an engineer, went the wholesale route, and then decided to open my own shop. He went into a completely different field and eventually, landed into the mortgage industry. And when at one point in time, I had a previous business partner as well, and I decided that, that this is a conversation for another podcast. That you know what, I think I can do it better myself, and so I kind of ventured out and did my own thing. And at the same time, Joe kind of was working for a bank as a retail loan officer, and kind of, we started talking about how great it would be to, work together as friends. It wouldn't feel like work. And so him and I basically ran the retail operation for a bank. And then, something about someone playing with your paycheck that really motivates you to really not want to be an employee again. And so, after a very short stint, I said, you know what, I can do this better. I can do it on my own. And so that's what I did. That's when I started my previous company. And I started out as a broker, became a delegated lender over time, had delegated, all that jazz. And he, wanted to take a different route. And, one thing you'll know about Joe, he's a talker, right? He's a car sales, he's a salesman. And so he had a different vision for what he wanted for his operation. And, we both did our thing. And yeah, around the time of, the pandemic, at one fateful night we had dinner and we were talking about how great it would be to work together. And, we decided to combine our strengths and weaknesses and create a company. So eMortgage, in its current form, began about 5 years ago, yes.
I'm always fascinated by the story of coming together as a co-founder or a partner. And it sounds like you have a very typical structure where Joe is very out there and visionary, and you're maybe the guy that's behind the scenes pushing the broom and making things happen. Did you just come into that right from the get-go? Did you assign roles and say this is how we're going to play this, or did it just evolve?
I think organically we kind of each focus on the things that we enjoy doing or prefer to do. I'm putting myself more in that, in that role of doing the things that I necessarily may not like or have been known to kind of shy away from. But, he's a very, and I mean, going back to childhood, he's a very extroverted, very outgoing guy. Him and I will go into a room and he'll spark up a conversation with the most random person, where for me, I need an opener. So he was like the perfect opener. So I half jokingly say, you're the CEO of the company for everybody outside, and I'm the CEO for everybody from within the company. But, titles don't mean anything. We complement each other pretty well. And, for the most part, we both tend to focus on the part of the business that I think we're better suited for. So, if two people have the same strengths or weaknesses, it's probably a pointless partnership. So, he helps me and drives me in a lot of ways, and I like to think I do the same thing for him. And or at least that's the perspective, Mark, that I like to give myself, so I keep my sanity, right?
Yeah, well, I'm like you. I rationalize it the same way. Sean and I have very similar roles and delineation, and it's just interesting to me. I like to see how people structure that and how they establish trust with one another, and what the handoff points are.
Yeah, that's actually a really good point, because I think at the core of any partnership to work, yes, you both can be very different in a lot of ways, but if the core values are the same, you need that, for any foundation of any sustaining partnership. So at the end of the day, him and I, we share a lot of values, with regard to life, family, the things that are important in life. So that's always, what helps me in those. Because, in any partnership, I don't care if it's business, personal, there's always tension, right? I always revert to those things. I'm like, okay, at the core, this person is good. He's got my back, I've got his. We both come from a good place. We may not agree on a lot of things, but we both are seeking the same thing. And I always default to that, and it kind of helps me get through a lot of the issues that we have.
Yeah. But, to that end, I mean, along the way, have there been decisions that you've made in business that maybe were very disagreeable to Joe or to others that ultimately maybe were the right call, that you just had to push through and make sure that you did it that way?
I'm going to take every opportunity to give my partner credit where credit is due, because, I think he knows where my strengths are, and when it falls in my lane, I wouldn't even say 9 times out of 10, really it's 10 times out of 10, I had my way, or I have the final say. And I try to afford the same respect to him for the part of the business that he's in. He's very good at what he does. I'm good at what I do. And we try to kind of identify our lanes and stay within our lane as much as possible. But I'll share something with you just because it's fresh on my mind. You're literally asking me the question, and it's playing out in real time. And it's something that I'm having to deal with right now, with regard to like a decision that I'm having to make that may not be popular, right, by other folks, maybe not my business partner, but other people within the organization. And so I recently added a new member to our management team, right? And I'd be lying if I said it didn't come without a load of pushback, right? Some people, it's human nature. You feel a little bit threatened. How is this going to impact me? And so, I'm only sharing it because it's literally playing out in real time. But the takeaway for me, from that experience is that, I probably could have done a better job of communicating that decision, right? At the end of the day, I'm going to do whatever I think is best for the organization as a whole, because the company should be bigger than any one person, bigger than Joe, bigger than me, bigger than anybody on my team, right? So, but communicating these decisions a little more effectively is at least a lesson that I'm learning, right? So, hoping to kind of keep that in mind for future decisions, for another something else that I might do or a decision that I might have to make that may be unpopular.
Yeah, there's just so much truth in that. I mean, the communications piece is always the hardest piece, and the blowback, especially internal blowback, when you don't communicate the thinking behind it and the direction you're headed and why it's important, and the rest is definitely a big piece of that.
Let me tell you, they don't teach a lot of this stuff in engineering school. So.
Being a product guy and working mostly with engineers, I will say though that engineers' ability to think through systems and stuff is like, okay, once you learn that lesson, like it's going to stick. It's now a system for you and something you'll put into place going forward. So I'm confident you'll make the most of it.
Yeah. I hope.
Yeah. I was going to switch and maybe talk a little bit about got a lot of independent loan officers out there. Obviously, we're all about helping small, independent, local folks. Lots of different ways to go about your business. Clearly, there's folks that have all employees and, big call centers overseas and that kind of stuff. You've got local folks in local towns that are part of their communities. I think that differentiates you in a big way from a lot of the big companies in the space. Would you agree?
I agree. Yep.
And was that something? I mean, how did you make that decision? Was there any thought around we want to support local communities and support these independent folks, or was it just happenstance, or how did you get there?
I wish I can take credit for it. I think it's more the business model than anything, to be honest with you. So, it attracts a certain type of person. We have a lot of, entrepreneurial type, independent guys that are gritty. They define themselves a certain type of way. So I think it's more of our business model than anything. So it just happens to attract that type of person. When you talk about the broker community versus the retail world, most of our people, they're not asked to clock in 9 to 5, right? There are some expectations of them, but really it's you eat what you kill type mentality. And so maybe that's not the best analogy, but really that's the type of people that are typically attracted to the broker space. Yeah, but we don't typically attract people that are 9 to 5 type, so.
Yeah. No, and it's if you go to your local any of your local sports games, your local fundraisers, nonprofits, etc. Right, they're supported by these folks. Like you do see your local mortgage broker and other folks like that, and they also become mayors and the rest. And I think it's a great way to support local business.
Here's actually, if I can interject just for a quick second, because I think you hit something the nail right on the head, right? So I was having a conversation with one of our teams not long ago. I think a lot of people in my position, right, we talk about referral partners all the time. And because obviously that's important, right? There's only so many ways for somebody to get business, and having referral partnerships is important, right, for a self-sustaining long-term business. And usually 9 times out of 10, when I talk to somebody about referral partners, immediately they go to realtors, right? Now I don't know about what the latest statistic is as far as how many individuals in California, for example, that have a real estate license. But I mean, I remember at one point it was something ridiculous, like one out of like every 60 or 70 people have a real estate license, right? And I think, instead of thinking small and just going after like a realtor for a referral partner, small businesses, right? People within your community that you can interact with, support, building kind of like an ecosystem that kind of feeds itself is the mentality that we would like to push for 2025, right? Going to a local bakery, right? Or a coffee shop or a florist, right? And say, hey, look, I'm, here to support my local businesses. Instead of giving away, $25 Starbucks gift cards this season, I would like to create this, ecosystem where I can help you draw attention to your business. And I would love if you would reciprocate by letting me put up, my information here for anybody that may be interested, right? And so
Love that.
doing something like that, I mean, I think the growth potential is like limitless, right? You don't need to just restrict yourself to a realtor. You don't need to restrict yourself to an insurance agent. Every small business that you drive by down the street is a potential referral partner. So that's the mentality that I think we would like to instill. And yes, having those types of relationships, I think, is more common in an environment like eMortgage in the broker community. You're able to do those sorts of things, less so with a retail call center.
I think that's fantastic, and it kind of bridges into another question I have, which is, when I was down at your offices and I've participated also online, it feels like you and Joe have a very tight cadence of ongoing training and processes and systems, and so as you talk about that, like that building community and focusing local, are you then taking that message to your brokers and teaching them or giving them kind of the how-to so they can go do that?
So, great question. Again, you're asking all the really, relevant questions that are part of the conversations that we're having even today. So I'm going to, in no particular order, kind of speak to some of those points. So I think a lot of people in the mortgage space, in the broker community that aren't 9 to 5, right, have a difficult time with knowing what to do. Not everybody, but a lot of folks. If you're not part of a team, you're an independent LO, and especially if you're not used to buying leads, right? You wake up in the morning, you're like, what am I doing today to generate business, right? What's my roadmap? What's my action? What are my action items for the day? And I think a lot of people struggle with that. So my perception this year especially is that a lot of the trainings that, and if we're doing it, I know other people are making the same mistakes. People are doing things for the sake of feeling busy, and it's not always productive, right? You're hopping on from one training to another because you want to feel like you're doing something. I think most of it comes from a good place. And so the conversations that we're having right now is trainings are important, okay? The quality is more important than the quantity. I don't need to have a training every day. I would rather keep the focus and attention on the things that matter. And so we're being a little bit more mindful of the things that we're putting out in 2025, because it's not just one person, right, for an hour. It's hundreds of people. So that's hundreds of hours. So I kind of think of things in that perspective. So if I'm going to take up hundreds of hours of productivity, it better be for something. And so that's one, thing that we've realized and we're working towards, right? So the quality of the types of trainings. The other is, making sure that if we're talking about, specific types of trainings, that the person that's doing that training is an expert in that area. And for small organizations, and again, I'm kind of painting with a very broad brush, but when you have one person wearing many hats, it's you can't be a systems trainer and the lead processor and the sales manager at the same time, right? And so just one thing that I'm proud of that we started in 2024, and we're going to continue to expand in 2025, is what we call our LO support team. So this is an internal team here at corporate, and the idea is to have experts in their own specific area that take ownership of that part of the business. So I have a person who's a systems trainer. That's her sole focus. She's not training on anything else other than how to be efficient at taking an application and doing the things that you need to do, so you're not wasting an hour taking an application when you can do it in 15 minutes, right? I have one person whose role is to, help you with structuring deals, who happens to be a previous account executive. That's all his, that's his role from when he comes in the morning until he leaves at night. That's all I ask him to do. And then, those types of individuals. So we have individuals specific to that part of the business that we feel is important. And again, just being a little bit more mindful of the amount of trainings that we do, because it's not about the quantity, it's the quality of the trainings. So.
Let's switch gears just a little on you. Big part of the conversation these days is AI and large language models and, automated online chat and stuff. And I know that's giving the big boys in your space, not that you guys aren't big, but the big retail, let me call it retail, the retail folks in your space with those call centers, they're starting to deploy these things. How do you see that rolling out with, these independent loan officers, local? Do you think they'll get impacted? Do you think it'll actually give them an advantage because they're a real person locally? But how can they leverage it? Like, what are your thoughts there?
I'll answer it this way. I've been in the mortgage business for over 20 plus years. I feel if I'm a consumer doing my loan, I would want to deal with a live person. I don't want to deal with an AI. If I have an issue, it's funny because I had a question on a charge on my credit card the other day, and I called, and they go through the normal prompt of like, are you calling because of dispute on the charge, yada yada yada, and I'm pressing 0. I just want to talk to a live person. There's nothing like talking to a live person. I don't think we have to worry about the role of a loan officer, at least a good loan officer. There's always going to be a need, and this is me, an industry person who's been doing it for 20 years. I can easily fill out, a link and, automate the whole process if I wanted to. But, I think the need of a live person to converse with, this is, I don't think that's going away anytime soon. So AI and all these tools are important. They will add efficiency. They may drive margins lower to the benefit of the consumer, but if you use it appropriately, you may make less as a broker owner on the deal eventually. But if you're putting more units, that should, offset it. So I'm not worried about, the automations. And yes, industry is going to continue to evolve. But, I'm either going to take the approach and I'm going to, try to fight it and lose, or I'm going to adapt it and try to benefit from it. And that's the happy path that we try to take.
I love that. So keep that face, especially with this advantage of that local loan officer face. Keep them there, keep them local, and then deploy AI on the back end to make them more efficient and make better use of their time.
Exactly. Yep.
Awesome.
Sam, doubling back to kind of your model, right? You're bringing in these independents and giving them a framework and giving them the systems and the backing and all the rest. I got to imagine that in that you probably feel like a farm league sometimes, where you're helping somebody get their footing, and then they ultimately establish enough traction where they leave you and try to go be their own business or go somewhere else. And how do you feel about that? Is it just part of the game? Is it built into your model? And how do you deal with that?
One of the greatest gifts in life is gaining perspective, right? Now, people go ultimately. I don't own anybody, right? I can't control their decisions. So for me, this understanding drives me to improve and make my company as the best that it can be, right? So my goal is to make that decision for a loan officer leaving as hard as possible, right? That means I have to bring my A game every day, consistently. I got to compete for that business. I have to compete for their loyalty, and I don't take anything for granted. So for those that were part of our company that went on to launch their own business, there's never any hard feelings. There was never any ill will. In fact, I'm proud of a lot of them. And the ones that are excelling and they're doing really well, honestly, they're pushing me to get better. And so that's the perspective I choose to have. I think it's healthier.
Much healthier, for sure. So when we were together last, when we were talking a bit about some of the systems that you've put in place, and I have another friend who is chairman of another mortgage company, and his are all employees, but I remember him telling me one time, he's like, Mark, I could have a machine that creates $100 bills, and it would still be a challenge to get these guys to do the work. And so you're bringing these folks in, you're trying to train them to be good lead generators and good business people. What sort of systems are you putting in place to help them, and then what sorts of accountability or nudging do you have to do to make sure that they're staying on task?
That's a fair question. It's difficult in the business model that we have when somebody consider themselves to be an independent contractor to really force them to do anything. So you can shape certain behaviors, and that's what we do. We try to incentivize and reward certain behaviors, but at the end of the day, the only accountability that I can realistically and candidly, right? We look at production on a month-to-month, quarter-to-quarter basis, and we're very forgiving, and we understand that if somebody isn't doing well, the first question to ask is why, and how am I failing that person, right? So we look at, without giving away too much of the secret sauce, there are certain things that I kind of try to keep track of, which give me a bit of a pulse on how engaged that person is. So I'm talking about engagement before I talk about production, because usually the two are tied in with one another, right? Is that person, involved in the trainings? Are they reaching out to my LO support team? We keep track of everything. You open up a ticket with IT, because you can't turn on your computer or your mouse isn't working. I keep track of it. You reach out to my LO support team because you have an issue or need help structuring a file. We keep track of it, and so forth and so forth and so forth. This is beyond the normal things that most brokers just keep track of, right? Which are funding units and volume, email activity. All those sorts of things give me a little bit of a better idea of the type of the person that I'm dealing with, right? And so if you're trying, we won't give up on you, right? If it's a matter of I don't know where to go buy leads, or I can't afford to buy a lead, and I think you're putting in the effort, I'll double down on you. We've taken that approach, and we've been burnt many a times, but I don't regret it. And so if we see that you're trying, then we're not going to give up on you. It's the folks that have completely checked out. They've got another job. This is a part-time gig for them, or they just got their license because they're hoping, their cousin may need a loan in 6 months, that kind of thing. Those are the ones that are typically a little bit harder to kind of work with. So from an accountability standpoint, we go through this exercise every quarter. We engage based on the feedback. We make a decision as to whether or not it's the right fit for them. And it's not a science. It's really not. And, you never know what some other people are going through in their own life, and you have to be kind of a little bit understanding of those things, and we take a human approach to it. So it's not all about just dollars and cents, okay? So I'll answer that part of the question that way. With regard to the systems and the tools, I'm going to answer it based on what we have today and what we're working on, and some of what we're rolling out for 2025, but some of these things are still either being developed or about to be rolled out here by January 1st. And so I realized that, and I speak from personal experience, when I was a loan officer of one, I didn't invest in a CRM. My CRM was Excel. When I bought leads, so it was very archaic, and this is me, an engineer, right? And so I realized a lot of things in growing up in this career, and I think a lot of people don't know any better, and so they don't make investments in the things that they will later realize are important, like a CRM, for example. And so part of the challenge for me is, I will say retail support, wholesale pricing. That's our theme for 2025. Give them as much support, don't charge them anything for it, and hopefully the business, will come from that. But with regard to like pipeline management tools, right? If you don't have a CRM, if you're an individual LO, you either don't have the means or the desire to invest and build out a CRM, I'm removing that element from you, right? It's going to be right there for you. Log in. These are your leads. This is where every lead of yours is in the pipeline. These are your active files. And beyond that, the analytics that go behind it, right? So part of the appeal for working for eMortgage is the flexibility, right? So, for a consumer, why would you want to go to a bank and, take one offering when you can come to eMortgage? We've got 155 banks that we work with, and we'll shop your loan for you, and we'll place you in the best loan that we think based on the different things that may be important to you, whether it's pricing, product selection, turn times, et cetera, et cetera, et cetera. There's a lot of reasons why somebody would make the decision to go with one lender for another. Now, I say these things and it's common sense, right? It's mortgage 101. But how is a loan officer to know for them to know where the best lender is for that particular scenario? They need to have stats behind it. If they're not doing loans consistently, if they're not doing, a dozen loans every month, they don't have the statistics behind the average application to fund it or the type of service level that a particular lender may have. What I have, one of my strengths is size. We have 900 loan officers. So part of the tools that we're equipping them with for 2025 is just that, right? So we keep track of, the average application to fund it for every transaction that goes through our system. Now, a loan officer, I think, would find a lot of benefit of knowing why lender one, has an average 25-day turn time for, the past 100 loans, where, lender two may have, a 50-day turn time. That kind of information is relevant for them to make the decision that's best for them and for their consumer. So we aggregate that data. Now we make it available to them in our system, and we use our size to our benefit. Rating, right? Every experience with every lender is different, and people will make the decision to go to one lender or another for various reasons. We have a way to capture that data because we ask our loan officers and our processors at the end of every transaction. We aggregate that data, and now that's available for every loan officer. Think of Yelp, right? I don't go to a restaurant without checking them out on Yelp. I want to know the reviews, the good, bad, the ugly, right? So we took that concept and we applied it to, our lender base. And so next step for us is to use that information to elevate our lender partners, because they are partners, right? If I did 1,000 loans for you, in the past 6 months, and my loan officers are consistently telling you you're doing well or doing poorly in a certain area, I think you would want to know, because the idea is to kind of lift each other up. So that's a goal for us for 2025. Every quarter, just like I have a broker scorecard with each of my investors, we're going to turn around and give them their broker scorecard, so they can see how many loans that we did, what the average turn time for each file was, what the feedback from our community has been, and hopefully we can work through those challenges so we all lift each other up. So those are some, not all, but some of the tools that we offer our loan officers that we hope make them better at their craft.
Super cool. And you're elevating their game way beyond what they could do individually, and I think that's great. I suspect that Sean and I both have a burning question right now, but I'm going to go ahead and pop the balloon on this one. You mentioned your LOs buying leads, and Sean and I will make no bones about the fact that we don't like that strategy. It doesn't mean that you can't do it, but as the core element of your strategy, buying leads, not a fan of. How does that fit in with overall lead generation for you when you're advising your folks to go generate leads? How much of that is based upon purchasing leads versus going out and identifying good targets and nurturing those?
Generating your own.
Let's break it down to the 3 different ways that you can generate business, right? First is you buy leads, right? The second is you get it referred to you by referral partners. And the third, it just comes to you organically, right? So when you're buying leads, the one thing I will say from experience is you cannot be afraid to spend money, and you need to be consistent, right? So that's number one. When you're working with, and that's important. The second way, like I mentioned, is referral partners. It's not enough to simply do your job and deliver what's expected. That's like bare minimum, right? To make that partnership, though, successful and sustainable, you need to figure out a way to be a true referral partner. It's not a one-way street, right? It's not just my realtor refer me to clients. It's how can I help my realtor generate more business? So, you can receive referrals from a realtor and close them on time, and that could be sufficient, but more often than not, if your referral partner has a chance to work with somebody else who also refers them business or helps them grow, they're probably going to make the switch at some point. It's not enough. The third way to generate business, like we said, is, organically. That requires time, skill, and it's a unique quality to figure out a way to set yourself apart from the competition. That's the one reason why branding is so important, right? You look at what are the shows? Selling Sunset and Selling New York, these reality TV shows, right? Agents are like chomping at the bits to be on those shows because they want to gain visibility, and they're perceived as top agents at that point. And that reputation attracts more business. So that obviously approach takes a lot of time, and it's it doesn't work for everybody, but it's essential to look at all three. You can't just, I don't think, for a self-sustaining business, focus on one and not the other two. It's going to have to be kind of a holistic approach of doing all three.
Mark.
Hey, I love the diversification part of that answer. Like, I mean, yes, there are multiple pieces. I have a lot of trouble when I think about small businesses, and especially real estate centric businesses, taking big chunks of their budget and big chunks of their profit potential and giving it to somebody else who's a lead generator, when the opportunity exists to target people in their local markets, stand out as a local specialist, establish that brand for themselves, and deliver value that others can't.
Generate
This is
their own
where,
leads.
this is where a tool like PropertyRadar really comes in handy, because if we're talking about referral partnerships and figuring out a way to add value, right? I'll give you an example. Something I used to do kind of like as a best practice, right? Most of my business has always been purchase business. And there's multiple opportunities on that one transaction, because you're dealing with the client, you're dealing with the buyer's agent, and you're dealing with the listing agent. Every time I close a transaction, right, I would take that data. There are farming tools that you can use, PropertyRadar being one of them, right, or that transaction that you just closed. And there are ways, whether it's through title or PropertyRadar, where you can identify hot properties, right? People that may have been in a home for a specific period of time. There are tools that you can use that you can identify, okay, well, for this neighborhood, the average, homeowner stays 5 years, right? And, there are tools that you can identify in that specific neighborhood of, say, 1,000 homes, 50 that may be hot properties, more likely to sell, right? Somebody who's been in the house for longer than, the standard 5 years for this area. Property that may have a certain amount of equity in it. You can research, family size, which, sometimes is a determining factor for why somebody may want to, move up or move down, right? And so you can use those tools to farm that area and take that data. And by the way, I think loan officers have access to more tools than realtors, by far, right? And so you just got to get creative. You take that data and you create that list, and you approach your buyer's agent and you thank them for giving you a chance at, closing that deal. And you say, I'm going to help you farm this area because I want you to be the guy for this community. Or you do the same thing with the listing agent, right? Or, there's little things that you can do to show that you're adding value to your referral partner, and it costs nothing, right? How much does it cost for a subscription of PropertyRadar? It's worth its weight in gold, right? And so that's one way. Or you can buy age data or, some cheaper form of data and use PropertyRadar to enrich it in such a way where you can be a little bit take more of a targeted approach to identify potential clients in a particular area. So you don't have to break the bank. It's not about spending godloads of money. It's about being creative and using the tools at your disposal. PropertyRadar is a very clear example of that.
How much does like cold calling, direct mail, email outreach, online ads, targeted online ads, that kind of stuff, how much does that play? I mean, that's kind of our go-to playbook for small local businesses, because the benefit you have of being local, for realtors, what I always like to say is, Zillow can't send postcards, right? To send postcards to every residential household in America is, $60 million, right? They're better off running a Super Bowl ad for a fraction of that cost and, for much bigger exposure. But for the local agent, who may have a target market of 1,000 or 10,000, right? Direct mail becomes pretty affordable, whereas the Super Bowl doesn't make any sense at all. So that's kind of this advantage your local folks have over the big folks. So for your loan officers, how much is that part of your playbook? Just making calls, getting direct mail out there, reaching out, making out the point that you're local and in the neighborhood.
Yeah. So, in our business model, 900 plus loan officers, you kind of see a little bit of everything. You've got guys that are just hungry. They can, hit the phones for 10 hours a day, and that's just their thing. You've got teams that you see send out a lot of mail. I mean, with regard to mail, at one point we were doing so much mail, Joe and I said, we can probably do this ourselves and save our people a lot of money. And we actually opened a mail house. We
Oh,
physically opened a mail house. We got the equipment, hired the employees, we had them on staff, and we created the designs. And literally, instead of paying X for a mailer with an outside mail house, we're going to do it for you at cost. Now you can send out twice as much mail, which we hope result in twice as many applications, and we get it, it pays for itself that way.
yeah.
So we did that. And then when the market turned, 8% mailers weren't so sexy. So
It's not getting people excited.
Yeah. Sign up today for your 8% mortgage.
so we've got a little bit of experience in it. And so I see that kind of coming back a little bit more now.
Yeah.
Not to the extent that it was back a couple of years ago, but I think it has its place.
Yeah,
Um,
specialized products for certain
Sure,
folks,
or
some
even if it's
interesting
not just
things.
specialized project, it's just like that approach that you took earlier with, instead of blanketing an entire like state, right? You take more targeted approach and you send a, more well thought out, mailer to a specific group and you do it consistently. And so I find some of the most successful realtors that I work with are, you know, experts in a specific, they're like the experts or they're, they target a specific area. This part of the city of Orange or this part of NI Mills or Tustin or what have you. And they're just known that's the guy or that's the team for this area. And they see a lot of success. And that also gives them the ability to be more involved in that community, whether it's doing some sort of drive or, taking part in whatever organizations or whatever which cost you nothing, right? And so I think there's something to be said for that localized approach for sure.
Yeah,
Uh,
with realtors, I often say, would you rather have, 80% market share of a subdivision and really focus on that, or 2% market share of the city,
yes.
right? And almost everybody's like, they're so anxious just to take a deal from anywhere. They market themselves as being for the city rather than focusing on the subdivision when they could be doing 2 or 3 times the business and have total ownership if they just focus. And what would be the equivalent for a loan officer? If you wanted to have a loan officer really specialized, how would they do that locally?
How would you, well,
Is
how,
there not really equivalent?
so the question is, how do you take the approach of having a loan officer be a specialist in a
Could,
specific area,
Well, it could
or,
be an
or,
area or a loan
or,
type
or loan
right?
type or whatever. Yeah, like is there something
So,
equivalent for loan officers to like
yeah,
show expertise, like veterans, like focusing on VA
yeah.
loans and that kind of thing?
So that's actually a very good question. I'll answer it as best as I can. So there are some very few products that would make sense for a loan officer to kind of focus on exclusively, but VA loans, FHA loans, agency loans, even non-QM type loans, most of the underwriting, okay, so the set of guidelines that you follow may be different from this product to that product, but I think at the core, most of it, 90% of it is the same. A lot of it is very common sense, which is why it's important to kind of understand why things are the way they are, right? As an engineer, when someone told me no to something, right? If I didn't qualify, I would want to know the why, right? I want to work through it. It's the same concept of like, uh, you know, why does one loan carry a different interest rate than another? Why is a loan program for an 800 FICO score borrower priced differently than a loan program for a 600 FICO score borrower differently? Why are those adjustments different in the open market on some loans, for example? You always want to know the why. So I think a lot of these programs, part of it is, we market ourselves to be specialists. And all that means is maybe you understand that product really, really well, but a VA specialist can also do a kick-ass job, on an FHA loan, right? Now, there are some products, as you were asking that question, the thing that came to mind was reverse loans, right?
Mm.
You've got to be very, very careful, not just because there's I think there's a few more components to a reverse loan that you normally don't need to worry about on a normal type of loan, but also because of the clientele type that you're dealing with. It's more of what you can refer to as a kitchen table sale. It's not
Right.
something that you oftentimes can effectively or as effectively do with one phone call, right? You've got to be very patient. If you're dealing with clients in your, area, like meetings one-on-one are a little bit more commonplace. And so for that particular product, I would say being a reverse mortgage specialist to me makes sense. For all other products, I have a tough time saying, as a loan officer, I want you to focus exclusively on this product or that product or that product. I think you're
Just limiting
pigeoning it.
yourself.
Yeah, it's you're probably doing yourself a disservice.
So for the local aspect, for a loan officer, it's more about, hey, I'm here in town, and if you give me the business, I'm going to go spend that money in the local stores,
that's
give to
one
the
way.
local
Yeah,
nonprofits. Yeah,
yeah. I mean, that's one angle, right? But people will do business with you if they trust you. They'll keep coming back if they like you. If you're
right.
part of somebody's circle, and you establish that relationship with them, they'll use you again, and they'll refer other people to you. So there is definitely a benefit to having that localized presence. But I think, candidly speaking, you see it more with realtors than you do with loan officers, just because of the nature of the business. Most of the work that I do as a loan officer is done over the phone or via email. With realtors, you're driving them around open house to open house. There's a lot of time spent in that car.
Yeah,
So there's a little bit more of that, I think, with a realtor than with a loan officer.
fantastic. Oh, this has been great.
Yeah, Sam. I mean, before we wrap, I got one question for you. I mean, going into what could be a very challenging year for mortgage professionals, if you could give mortgage professionals one bit of advice, what would that be?
Stick to it. If you want to be successful in life, I mentioned it earlier, look at everybody around you, and sometimes it's probably smart to do the exact opposite. When 2007 came about, and everything that I'd worked for those 6 years working for that company kind of went up into thin air. Instead of going the safe route, I took the contrarian approach and I started my own company. Probably at the worst time, but looking back, I'm glad that I did. When after the market started to turn south on us, and you saw a lot of other companies kind of scaling back and maybe letting some licenses go in some states or letting some staff go, we said this is the time to kind of attract talent and double down and expand. And I'm glad we took that approach. So, if you want to get far in life, sometimes you just have to do, the things that kind of set you apart from everybody else. So don't be afraid to take chances. With regard to interest rates, it's easier said than done. I get it, right? But nobody knows where money's going to move, right? Even the experts get it wrong, right? A few months ago, the Fed was projecting a 100 basis point decrease for 2025, and now they're telling us it's going to be 50.
Yep.
Yeah.
In 2 months, it may be different. The role of a loan officer and a realtor is to be the calm in the storm, be the voice of reason. You're managing emotions and as much as anything else. So just stay focused on the fundamentals, keep your head down, and don't give up.
I
Love it.
Yeah, zig when the others are zagging, and stay focused.
Yeah.
So Sam, I mean, for those mortgage professionals that are out there, maybe working for a big company or trying to get their footing, how do people get in touch with Sam, or how do they get in touch with eMortgage Capital?
I probably have the easiest email address in the company. It's sam@emortgagecapital.com.
Fantastic. Fantastic. You've been a great guest. Appreciate your time, and wish you all the success in 2025.
And I appreciate you both very much. And Mark, I'm going to be reaching out to you in 2025. I have some ideas to run by you.
Fantastic. Fantastic.
Thanks, Sam.
Well, hey, if this episode was of value to you, please subscribe, pass it on to any friends or colleagues that can find value from this. And as Sam says, stay focused, stay driven, and keep climbing.
Let's grow, baby. 2025.
All right.
Let's go.
Let's do it.